Alright, so starting on the next study. The next two studies are intended to illustrate additional principles involved in figure charts. The study before this, I went over the basic principles. You had cause, effect, hinges. You had cause on the pullback, cause on the rally, stuff like that. Overbought, oversold conditions, etc. So now he's going to add additional stuff, alright, to test what you've already learned, etc., etc. On page 789, we got a 1 point figure chart from February to October of 1931. This chart begins with steel around 140, following the recovery from the low level of December 30th. So the formation started at A, as you can clearly see. The formation. It went from, I think this is 46 to 45 to 44. 6 to 45 to 44. Right there. You can clearly see the low supports from 46, I think this is, to 45 to 44. So these are increasing signs of weaknesses. Then you have a weak rallies that can't really do anything. One attempt, two attempt, three attempts, and then the stock had dropped. Well, that's where the stock dropped, when it broke this area. And now you have that head and shoulders type of distribution. So you have the cause here. That's not bad. Cause here is that's the head and the shoulder. So a lot of times, you first of all understand that you have preliminary distribution. A lot of times when you see that head and shoulder type pattern, the left shoulder is where distribution started. The head is the hypodermic maneuver or climax, and the right side is like it's testing, and also it could be a shakeout to get rid of the early shorts. Ooh-wee. And if you consider the entire thing, yeah, big count, big count. There's a 3 point figure, so they're doing their thing on the on the 3 point figure and saying that target goes to 112. Here's your 3 point figure. Just take the count off the top, off this base. So it is customary for those handling such a campaign to give a stock a run up in order to catch these shorts from allowing the downward swing to become apparent. He says, if you took a short, you could pyramid on the way down, etc. So in the no are points of hesitation. I could just, let's get rid of this. It's a change in behavior in terms of price. RNS supported 2 times at 84. This is interesting. Basically, you have a rally that's a change of behavior. Right, and I don't know why he didn't mention this, but I think he did. Long period down. Where's P? Uh, P. I don't understand. There's no P. HIJKMNO. Where's P? Anyway. He forgot P. So I think it's long period down, possible oversold. That's probably the biggest down column there is, except for here. One, two, out of the last three breaks. So anyway, it goes down, then you have a price-based change of behavior, which after that there is a base. So the base, actually, that big base at the bottom is actually occurring after the change of behavior. So it's it's a big base on the pullback. Big base after the pullback. The base doesn't have to be the extreme low. You could have like it goes down some type of almost like a V bottom, and then it runs up strong. There's no cause here to sustain a bull rally, sustain this meaningful bull campaign. So it then goes down, and now you have your cause that can sustain a big bull rally. Shit. So after this, he includes P. So initially he took the base, and then he saw the price was going higher, so he went further back. This is interesting to look like over here when he initially took the base. He took the base, like the reaction to the reaction. He didn't include the rally part, the rally, the line at the rally. He just included the base. Then, then when he included the second count, he went all the way back. So UVWX or UVXY, UVWX is is a SOT. It's difficult. The thrust are shortening, and distribution is occurring. So we take initial count up here. It's 10. This is a strange count. It takes it all the way back to U. Like count within a count. Hmm. So now you have a hinge. Very clearly see that formation right here. So Bryce breaks to 95, rallies 4 points. That's at link. That's at Z. Compared with a normal reaction, so less than halfway back. and then forms a stepping stone count. And then when it goes there to 84, if it gets accumulated. And AA really, like, one important thing to mention is that it gets oversold. And then you have a count here. It gets oversold here. And some short covering. 71. There's more distribution. Okay, so I guess the point is really clear. Again, the best way to learn the Wyckoff course, in my opinion, and a lot of people have tried, a lot of people, you can tell they don't know what they're doing, is really to not only read the course, but apply it immediately on the studies. Just you can use a simple approach that I'm doing, and that's going to help because there's a lot of concepts and a lot of back and forth between the chart and the text, and going back to the chart and going back to the text. You want to keep the text and the chart together, and you want to just write down those indications, and after that summarize them. That is an approach to learning the material, because there's a lot of points about here that went on. So let's start. Let's just summarize this whole thing. The market goes up, you have preliminary distribution on the left side of the head, there's a support at 45, then it goes up to B and there's more distribution, and then finally the stock declines. When it declines, it breaks the low of 45, 46, goes to 45 and 44. These are increasing signs of weaknesses. Then it runs up on the right side, the right shoulder over here, and it does a stop run. So that stop run is to discourage early shorts or give the presence of strength, but there is no strength. It's just, going back to that area so it can take out the early shorts who realize that this is either head and shoulders or some type of negative formation over here. So the increasing signs of weaknesses are on the basis of the drop below the initial line of support right under B, right here. It breaks. Then the lowest supports. And after the stop run, it goes to F. From F to A is the cause from right shoulder to left shoulder. From E to B is the cause from right shoulder to the head. Whichever cause you take, you want to take the minimum cause first and see where it projects. And then you eventually get the projections, and it goes and has weak rallies along the way. And finally gets to where it's supposed to get to. And he talks about, pyramiding, etc., but it's not that easy to do. It's page 7. This must be page 8. So over here you have the market that's going down, breaking new lows, finds a point of hesitation on N and O, and then finally goes down here. It reaches an oversold condition, creates two causes. One is just the base, the other one goes beyond the base, beyond the rally to the initial oversold decline. Alright, there's distinction between two base counts here. So you get both of those counts, and price is supported at the 84 level, which is one count, and the second one goes all the way back to the oversold area. Also note that point Q breaks the trend line going down. So if you want to draw a trend line or something, it broke it, then it rallies, and when it gets to UVWXY, this area here, it was shortening of the thrust, which indicates hard work to make price progress. And finally, it's on a hinge. The hinge shows you got two counts over here. It breaks, it rallies sideways, gives us another objective. Before that objective, it attempts to rally, but it can't even go halfway back. Then it goes sideways, and some may say this is also a hinge over here. It's very clear that it is. Then it breaks, gets to an oversold level where some accumulation comes in. It goes up, and then, so you have on the down rally you have a count, on the up rally you have another count. And another point to note is when the rally targets are not being hit and the reaction targets are being exceeded, it is a strong indication of a bear market. And it finally goes down, and over here it forms a little bit of a cause. Only about 4 or 5 points, but it overshoots it and goes right back down. When it overshoots it, goes right back down, that's a sign that it's weak, because it's, Wyckoff didn't say this, but if your stops are above here, this would run it. Because a lot of folks will see this area right there, the weak rally before the breakdown here, as a place to put stops. So this could be an upthrust, the other type of upthrust, the stop run. But anyway, so after it does that, it goes straight down, which that is what indicates weakness, and moves sideways. There are about 3 attempts to go to EE. 1, 2, 3, finally, and there's actually like a hinge here. And then finally it breaks, then it gets to an oversold level, goes sideways, rallies, FFGG count, goes down, does not get fulfilled. There's some support coming here, probably because of this base. This little 65 base, when it rally, react to that 65 area. So it rallies again, forms what? A count, right? That count, and is a hinge. And breaks, goes to the initial count that was indicated by FFGG. From here you have a count that indicates a 4-point rally. And why did this come in? Why? Because it's an area of a prior base. So this was supported here from this base, this minor base or oversold condition base. It's just the area that support came in. It's not even a base. The rally was strong. Came to that area, went up, went down, again supported 65. Little base at the side, little rally at the top. So that's all there is. Alright, now this study, there's some key things to have learned. One is the head and shoulder base. The head and shoulder base is, he took a base from head to shoulder, and then he took a base from shoulder to shoulder. Alright, so you got 2 counts that way. He also noticed the lowest supports on the PNF and said that that was part of that sign of weakness. Alright, so that's one important thing when looking at bases. The second thing is went down here when he took the base, he took it just the base, and then he went to the rally and beyond the rally onto the climax, and he took a count from climax to end of base. That's climax to end of base, or like part of the climax to end of base, versus just the base. Okay, so that, I guess, I don't want to call it head to inverted head to right shoulder, but that's what it is. And then it goes up here, and he took a base here from WX, and then all the way from U all the way to X. Okay, so the point of view, which are all blanks, he took that all the way to X. After that, what else? So over here he took it hit down rally, and then the pullback. Both are counts. It's the rally count and the pullback count. What else? After here, after it broke, he took these minor counts. Again, you can see this very minor. He noticed that this was like some type of up thrust, and it thrusted back down. So that was an indication of weakness. Went to oversold condition, bobbed up. I guess you could call this a hinge as well, but you call this one a hinge. Probably because it was tight, much tighter. 1 to 2 point. Alright, so those are some of the, I guess, the part of the point and figure study. And that's about it. There's some other points I may have missed, but I think this is really good. So if you want to do this, if you want to learn the course, this is what you're going to have to do. Because as you can see, just reading it is not enough. It's just not, it requires a more active style to learn. Anyway, so go through the video, then look at the course, and then while you're looking at the course, mark it up just like this, and that will allow you to understand and learn this stuff. Alright, take care, bye.